Lyfts blockbuster IPO proves big losses are the new normal. Lyft began trading on the Nasdaq on Friday, kicking off what promises to be a big year for money-losing consumer tech startups. The second biggest ride-hail service in the US after Uber, Lyft priced its initial public offering IPO at $72 per share, valuing the company at as much as $24 billion when things like restricted stock options are accounted for. The company had Lyft is the first of more than a dozen high-profile consumer-focused technology startups expected to complete public offerings in 2019. Food delivery Uber is expected to begin its investor roadshow in April, meaning it could hit the public markets shortly after Lyft. Other companies, Lyft's stock opened up 21% over its asking price at $87.24 shortly before noon US Eastern Time. The day one pop. By early afternoon, Lyft's initial sugar high was already starting to wear off, with the stock trading around $80 an 11% gain over the IPO price. Investors in this year's wave of IPOs will have to decide how comfortable they are betting on companies that have Chief Lyft rival Uber is also chronically unprofitable, turning its first and so far only quarterly profit in the first quarter of 2018 thanks to mergers with regional rivals in Russia and Southeast Asia. Uber lost Lyft's losses are largely due to its with Uber. In 2018, it's unclear what Lyft plans to change to reverse those losses in the near future, and Uber seems unlikely to bow out of the US long term. Lyft, like other companies in the ride-hail industry, is banking on mass deployment of autonomous vehicles to make its business more profitable by eliminating the main cost, you the driver.
Raindrop, drip, drop top, top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that.